rationalization with regard to GST. But as this tractor demand was reasonably strong, every time we speak, you talk about how you're gaining market share, you're growing better than the industry. And the feedback was that on demand, on ground as well, demand was pretty okay. So how does this change things then?
This will, again, further enhance demand because you've got a reduction in price. But that's also the reason why, Nigel, I look for this as more a long-term play rather than a short-term play.
Indeed.
It's much more than what will happen in the next 45 days or the next quarter or the next year. This is something that, in a sense, is a fundamental reset. And that allows for customers to get goods at a cheaper price. It allows for a simplification in the entire process, which is very important for all companies. And that's going to stand India in very good stead. Yes, I can't take away the short-term gains. There will be benefits that accrue to everyone in the short term. But that, in some ways, I think the long term is more important than the short term.
You made a very, very good point, Mr. Shah, because before Prashant takes away, the need of the hour was to push forth some kind of consumption boost, and that's been done. There were some rough edges as well on the GST front, which are gradually getting ironed out. And I think the path ahead is clearly pointing to much better times.
Absolutely. Anish, so again, I'm not, setting you up for giving us numbers. But 1st of October we should expect when you post numbers for the month of September, it should be
again, I'm not getting into numbers month over month because there are multiple factors that come in. Short days this year are different from those days last year and so on. So there are multiple factors that come in. But as I would look at it overall, it is a positive trend.
Okay. Which of your businesses, and the auto business is one, right? But you're exposed to other segments in the economy as well. And you said you see this as a bigger, broader macro kind of a positive. Where will this show up in your businesses within the group?
I would say across multiple businesses because we would expect the farm business, as Nigel mentioned as well, to benefit from a tractor, farm equipment, and overall, as you have more money in pockets of consumers as a result of the savings they have from lower GST, that will go across multiple other categories. So as we think about our holidays business, and across the board, we would expect a lot more consumption. Our two-wheelers business will benefit a lot from it, Classic Legends, and that's one has also seen some benefit.
On the lending side, there's a fair bit of exposure to autos as well. I mean, I think there also perhaps is a bit of a pickup.
That's correct. That's correct. That will benefit the lending business as well. So as you look at the economy, and we represent the economy largely, we should see benefits across all sectors.
Just wanted to actually narrow down on that compensation cess issue. Any clarity on that?
There isn't clarity on that as yet, but that's something we will deal with as we go on. These are some of the things that will happen in the short term and not something that really worries us from that perspective.
Okay. All right. You did mention, obviously where we are going in terms of growth. What does that do in terms of launches for M&M? Are you preponing launches? Are you probably getting a little more aggressive in terms of launches? Where are we going to see those categories come through, and what do we expect?
So we have gotten very aggressive, not just in the recent past, but over the last few years in terms of launches that we've done. We've talked about our Vision platform recently, and that's one that is a platform that's fungible across multiple powertrains. We've revealed 4 different vehicles that we will launch with that. In addition, there will be more on the electric side. There will be other vehicles on the ICE side. So we have a very strong portfolio for launch over the next 3 to 5 years.
Anish, over the weekend, I don't think we can ignore the news flow, right? Maybe as someone put it, I was talking to James Sullivan of JP Morgan at the conference. He said, well, we have to wait and see if this is the first salvo and which hits services, in that sense, the entire visa bit. How do you think about this, Anish? And is there still negotiation? And the Commerce Minister is in the US, for example. Just your thoughts on how this pans out.
So if you look back about 5 or 6 years ago, there was a focus on H-1B and talk about curtailing H-1B. At that time, Tech Mahindra, our IT services firm, had actually pivoted to hiring a lot more local workers in the US with citizenship or green cards. And today, the vast majority of our workers in the US are citizens or green card holders. This is something that impacts all companies in the US because many of them are hiring folks with H-1B. It impacts all the tech companies in some ways even more. So this is not something that's related only to the Indian tech companies. It's a much, much bigger impact in that sense.
Actually, someone said it impacts Indians, but it impacts American companies more in that sense. Because
it impacts American companies a lot more. But let me give you a different perspective on this. Think about this from the Indian economy standpoint. The work has to be done somewhere. If the work is done in India and offshored, and now we have capabilities to do all of that, you're going to have more people stay in India, spend in India, and add to the Indian economy.
That's the hope, right? Absolutely, that's the hope, and hope we're able to provide that ecosystem here in India for that to happen. But global
that we can provide today.
Yeah.
Right? We have the capabilities to do that, and there are many of our peer companies as well that have the capability to do that.
Global capability centers is something somebody was telling me. I mean, we are opening 2 new global capability centers every week in India. I mean, the larger ones are here, the smaller ones is what I'm talking about, but 2 every week, and maybe the trend accelerates because of all of this.
That's good, because the work has to be done somewhere, and we have the capability to do that work very well.
You briefly mentioned Classic Legends. Obviously, that's very, very small. But, and I went in the last 10 days and tested the BSA 650.
And what do you think of it?
I thought it was beautiful,
yes.
And I've been a loyalist to the other brand that sells the 650 odd. But there were very good offers out there, because the rate effective today goes up by 30 to 40,000 rupees, depending on which bike, the BSA 650 or even the ST 350. Did you all see a lot of pre-buying ahead of this hike on that 650 category, 350 category?
I'm not aware of the specific numbers there, so I can't comment on that. But what I can tell you is that the products that we've had have been outstanding. We've won a number of product awards, as well as the demand we are seeing for those products now is very good. So we've got a business today that is ready to compete and do very well against some established players in that market.
Just quickly, Anish, we've been talking about the domestic market. What about the international side of the business? You all are looking to enter the UK. What are the plans there? What is the timeline that we're expecting?
So we are first focusing on markets that are ones where we've had a presence for auto in particular, which is South Africa, Australia, Chile, and the markets around India. We will then look at the UK on the back of the trade agreement. So the FTA kicks in about 2 years from now, so our planning process will start in some time. We have very good products that are competing with the best in the world today, and that is what will take us forward. With some of our ICE products, we're doing very well today in South Africa and Australia, and have gotten meaningful market share gains in those markets as well. So our approach is consistent with everything we've done, which is pick certain areas, do very well in those areas, and then move on to the next space. In farm, it's a different set of countries, because that's about Brazil, about Turkey, the US, where we've got a strong presence from a farm business standpoint. And those are the largest markets for tractors worldwide. And we continue to see good gains in market share and are well positioned in many of those markets.
Well, Mr. Shah, final question from my end before I let you go. In the government, the last few measures that they've taken, clearly they've done a bit of a pivot. The last few years were more focused on capex. Now there's a lot of focus on consumption. And you have said y'all are doing your bit with regard to capex spend as well. But do you think for an industry on the whole that capex spend, a little bit of a pullback could be a bit of a hurdle, and private capex now needs to come about and do the heavy lifting from here on, because the government has done its bit on the capex spends?
See, private capex is really a function of consumption. So as consumption increases,
they will have to.
Not just have to, we would want to, because that's what you need to be able to deliver the products to be able to grow. And the reason we've quadrupled our capacity in auto is because of the demand we saw. And as we continue to see demand, we'll continue to look at putting in more capacity. So it's really a function of consumption. So I think it plays very well in the current economic scenario.
We've got to get the cycle rolling, and then it becomes a positive, virtuous cycle. Anish, thank you very much for dropping by. It's always great speaking with you. Thank you.
Likewise. Thank you.
Thank you.
Thanks very much. Thanks. Well, that is Anish Shah at Mahindra & Mahindra, running us through, of course, what his group is going to see in terms of benefits. across businesses, across a range of businesses. But of course, the larger point being that this is a macro positive, and it should enable, provide at least the visibility of more durable, longer run growth for India itself. So, a higher growth, I think that's essentially what everyone is wanting here in markets and otherwise as well. Staying with auto, this is Rakesh Sharma, Executive Director at Bajaj Auto. We spoke with him earlier, and he put some numbers out as well. It's basically said in the 150cc segment, average benefit should be about 20,000 rupees for customers post this GST cut. Listen in.
There has been, in the last 1 week, a very healthy uptick for inquiries. And most people, particularly in the festive states, wait for the Navratris to begin so that they can take deliveries in the auspicious period. In addition, as part of the festive spirit, we've made it attractive, particularly for those people who are going to take finance. And we believe that this cut should see better penetration of financing. So there is a little bit of schemes on processing fees, etc., for customers who are going to be taking finance. So they will see an attractive offer over there. I think it should be buoyant times. I think most importantly, it will reverse the declining trend which the industry was facing. So I think that this reform is going to be quite a point of quite an inflection point, because it hopefully will reverse the negative year-to-date trend into a positive one as we go forward, not just in this season, but hopefully beyond the festive season in Q4 as well. Year started, all of us were expecting around 5 to 6% growth, because FY25 had closed at 6%. But slightly unexpectedly, for reasons of inflation, caution in the financing segment, we found that the industry actually degrew. And that is exactly what I said. But because of this change, the substantial benefit which the government has passed on to the customer, both in terms of both quantitatively and qualitatively, I think it will push the industry to reverse the negative trend and get a positive zone.
Welcome back. Well, for the Bank Nifty, it's showing a little bit of green right now, so nothing really to write home about. It's just about higher by around 15 odd points. Separately, just want to point out that it is a couple of these pharma stocks. So the Nifty Pharma Index itself is down around 1.2%. But if you look at a couple of these broader market stocks, Sai Life Sciences, for example, that CDMO player is down around 4 odd percent at this point. Granules India is down around 3.5 odd percent. Aarti Pharma is the other one, which is showing some amount of downside. And even Piramal Pharma, in fact, a couple of them, the commonality is that a couple of them are CDMO companies. So let's see, maybe there's some amount of profit booking coming in specifically within that space. But let's now focus on the other big story of the day. The United States has raised the annual H-1B visa fees to 1 lakh US dollars per applicant. Rima has been following the story the entire weekend. She's here with more. Rima.
Thanks so much for that. So IT stocks have been a bit edgy on the back of this $100,000 H-1B visa fee hike. Let's get to the stock-specific impact. So a lot of companies, mid-cap companies, have intimated the exchanges about the potential impact. So outlining that, First Source, no impact. They've not sponsored any H-1B visa. Coforge says only 25 new H-1B visa petitions last year. Of that, 63 were approved. Scient says only 6. Emphasis says 130 new H-1B filings in 2025. Hexaware says we've been trying to bring down our dependence on H-1B visa. Last year, there were no H-1B visa applications filed by the company. Persistent hasn't put out a number, but they're saying we do not expect any significant impact on the operations of financials. But in a nutshell, what the numbers tell us is that companies have been reducing their dependence. Only a fraction of the overall employee base is sent to the US on the back of H-1B visa, and therefore they believe the impact is not going to be manageable. From the large cap space, we haven't heard, but Bank of America, in its analysis, says Tech Mahindra will be most exposed. CLSA says LTI Mindtree Persistent could see the highest impact, while TCS could be the lowest at 1%. But on the whole, the EPS impact is seen in low single digits. So CLSA says not more than 6%, and that is assuming it's status quo, it's ceteris paribus. Everything continues as such, and the companies bear the entire burden. But that's not that's not a likelihood. In reality, the companies could look at sending fewer people on H-1B visa, increasing the local talent hiring, increasing offshoring, increasing onshoring. So therefore, the actual impact could be a lot more limited.
Thanks a lot for that, Rima. Well, in fact, earlier we spoke to Vikas Jain, CFO of Hexaware Tech, and Mr. Ganesh Natarajan, the former CEO of Zensar Technologies, to discuss the impact of H-1B visa order. What would it have in terms of company as well as the industry? Let's listen in to what they had to tell us.
$100,000 per visa is going to make the overall financials not stack up. I think what's going to happen from an industry perspective, everyone is trying to understand the impact of it, but my take is the companies will impose immediate travel restrictions, and it's going to be something like what we saw immediately post-pandemic, where there is going to be an immediate travel ban. Companies are going to urge US-based employees not to leave the country and advising new employees to avoid travel until there is more clarity. In the medium term, I definitely see that deal decisions may take longer to close as companies will evaluate the implications of this order, both from where to deliver from and the commercial implications.
Clearly, there will be a dampening effect on that. But will it affect the mid-tier and the large tier? As you already said, and all your commentary has already revealed that there's not too much of impact. But certainly for small companies which are relying on sending a bunch of people to the US, there will be an impact. So I think not very negative, but I would say certainly there will be some impact. Yes, there could be some projects which definitely need proximity to the customer, which might get postponed or even cancelled. So I would not say there will be no impact. There will be some changes to client directions in terms of how they do it.
All right. Well, on that note, we'll need to take a short break, but more market talk, lots more stocks on the other side. Stay tuned.
Welcome back. Well, the markets have come in for a fresh bout of selling, actually. And the problem this time around is the big boy Reliance Industries. Pull up the intraday chart. That's taken a bit of a leg down. And when that heavyweight moves down, that's what's taken the markets a little bit lower as we speak. The Nifty Bank as well, that was doing a relative outperformance. That slipped a little bit. So keep an eye out on that one. And the other one is Asian Paints that I remember was trading in the green. That's moved into the red as well. Not a large weight, but that as well, moving to the low point of the day. Gives you a bit of an uncomfortable feeling. But let's see, we're still holding on to the 25,200 mark. By the end of today, you'll want us to be substantially off that mark. Midesh Thakur is back with us. Midesh, last few minutes, some kind of profit taking is what we're seeing on the index. That 25,500 mark clearly is a bit of a resistance mark. But on the downside, at what level would you be looking to chip in, or do you think this market wants to correct a little bit more?
So I think, one, we had the bounce back during the day and kind of got sold into. That's, for me, not a very positive sign, because we did hit that 25,250 odd zone and then bounce back from there. Then again back to the near the day's low, which means that there's a good chance that we might see 150, 140 zones being tested. So wait it out in case you want to get into long side of the trade, so on the index. But on stock side, I have a buy call on NTPC. It's a conditional buy. It's trying to break on the upside. So buy about 341 with a stop at 337.5. Look for target of around 349 to about 350. And one sell call, that's Voltas, which is a sell with a stop just about 1391 for a target of around 1330.
Got it. Okay, all right. Thanks a lot, Midesh, for joining in. We'll keep coming back to you as the show progresses. Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. Good to see you. What's the view on the tech stocks? Clearly that's the problem pocket of the market. Most of the notes suggest that it's a mildly negative to a neutral impact on tech companies. But yet that index is down closer around 3%. Do you think it's presenting a buying opportunity, or do you think there's too much uncertainty? No growth, you don't know what Trump's going to do next, and still spends have to pick up. Your take?
And Ajay, good afternoon, and thank you for having me on your show. As if the problems weren't enough for the tech industry. And now this one more salvo has been fired by President Trump. And, it opens a Pandora's box, because who knows, this can, certainly be including even existing visas or even renewals. Renewals anyway are covered. And all right, the companies are putting up a brave face saying that they're not going to be impacted, and, the marginal effect is there on the financials. But one thought that comes to my mind is that certainly the flexibility of these IT companies does get impacted. And especially when you want to start new projects, then offshore first has to be on-site and then offshore. So that may cause some disturbances or some challenges over there. But broadly, I think it's not great for the IT industry, and certainly a big sentiment dampener from an investor's perspective. And yet there is no clarity on when the revenues will start to pick up. I still feel the entire IT industry, the large cap ones, most of mid-cap, are in a secular slowdown, slow growth zone, and there's nothing I can visualize or imagine which will take them out of it also.
Nipan, hi. Welcome to the show. Well, a lot of the pharma stocks are lower today. Is the market sensing that if they acted a little bit on IT, maybe pharmaceuticals is next, the CDMO plays are maybe under threat?
Yeah, I think so. That also could be playing on the minds. But, I'm not that pessimistic on CDMO companies. They will be able to manage and pass on because they are basically low volume, high value products. And they've got certain greater dynamics in terms of China plus one, and dependencies also are higher. So I don't think that CDMO per se may get impacted. But yeah, I think pure generic companies, who knows? I mean, this was the boat or the blue, was it not? I mean, and year through the president has been saying that he's going to impose customs duty tariffs on pharma products. So I think it's an ongoing saga, and I don't think there's any end to it. Investors are just kind of losing patience and avoiding everything which has got export revenues. Better to focus on Indian companies. We've got a fabulous GST cut in play. I saw the interview of Mr. Anish Shah. He's sounding so optimistic and positive, and they have their fingers in so many pies. So I think investors will move away from export-oriented businesses and look for good stories within the India play.
By the way, market breadth has completely become quite poor. So 1,850 stocks on the NSE are lower and about 1,200 stocks are higher. So that's not all that great at this point in time. Deepan, one name we kind of sort of don't talk about very much, but which has been buzzing for 2 days in a row, the Adani Group. Look at Adani Power, almost I think what 35-40% in two sessions flat. There was that Morgan initiation I think on Friday, and the story generally has been whether there'll be diversification in shareholding with more institutions participating, etc. Any thoughts and anything you track your own?
Yeah, Prashant, good afternoon. I think certainly this SEBI giving them a clean sheet has improved the sentiment in Adani Group companies and institutional investors, domestic and foreign. This may be one of the criteria for investing in a company. And now that uncertainty is done with, certainly they can attract more institutional flows. Adani Power, I think, also benefits from amongst the cheaper valuations as compared to some of the other Adani Group companies. And overall, I think there is certainly an improvement in the sentiment for power companies which are producing power from the traditional sources, be it coal or thermal. The general impression now is that both will coexist, and you need to invest also in the thermal power plants. And Adani Power, from that point of view, I think is one of the largest players over there. The biggest asset, over there in Gujarat, they have managed to turn it around as well. So I think sentimentally better, and valuation-wise, it is attractive compared to some of the other Adani Group companies. But as a measure of disclosure, we're very positive on Adani Port and SEZ. And we do feel that some of the new acquisitions will start contribute meaningfully going ahead also. And as and when trade picks up, these are great operating businesses and they can certainly report good revenues and profits going forward.
Okay. Deepan, wanted your thoughts in terms of NetWeb. Just going from strength to strength for this particular company. There was positive news on it today as well.
Yeah, you're right. I think it's a company we've kind of missed out. I wish we had bought it earlier. But, it's in a nice sweet spot. And, their order book position is certainly swelling. They're amongst the few producers of these servers which are in a lot of demand. And they've got great track record as well. A lot of awards also in terms of supercomputer that they have produced. And the company been around for a long, long time, invested a lot in R&D. This is what Indian tech companies have to do. This NetWeb certainly is a perfect example of that. And since there are very few of this, there's a scarcity of stock, which is why this is trading at some P multiple, I think 130 trailing 12 month. I don't know, I've lost count also. But look, we should be patient over here. I've seen many times that these P multiples, they tend to compress because of higher earnings. So give it some time. I think when it comes into some reasonable level, then certainly one could look at it. But right now, I think a lot of the positives have got priced in. No point getting onto a running train like this.
Okay, all right. Deepan, stay with us. Let's hop across to Nimesh. She's here to tell us that Standard Brokerage report. Nimesh, take it away.
And I just said, today's Standard was an insurance companies. JP Morgan yesterday put out a note and they've upgraded a couple of those names. But the first name is HDFC Life. They've upgraded the stock to an overweight from neutral. And they've raised the target price sharply to 980 versus 750 earlier. The other name is GIC-RE. There they've upgraded the stock. It's technically a double upgrade from underweight to overweight. And on that stock, they've raised the target price to 480 now versus the earlier target price of 197. LIC remains the top pick in the insurance names. And there they were target price of 11,052. Now for the sector, JP Morgan believes that the compounding momentum is likely to persist. We saw the similar pattern in the last 5 years. And that's going to continue over the next few years as well. And that will underpin further balance sheet spending for most of those insurance names. They're forecasting a 15% new business value growth for the life insurance businesses and nearly 12% book value growth for the non-life companies in the next 3 years. So that's the kind of growth they're going to witness. For the very near-term catalyst, JP Morgan says that any clarity on the GST-related tax products strategies could be a very, very short-term catalyst for these companies to outperform from here on. So a big upgrade, especially on HDFC Life, which is almost at an all-time high, and on GIC-RE, a technical double upgrade to an overweight from underweight, with sharply target price raised to 480.
Okay, all right, Nimesh. Thanks very much for that. So that's Dipan, coming back to you, what's your sense in terms of a couple of these auto stocks? I was just reading a report by JP Morgan. They've upgraded the auto sector to neutral. We had Anish Shah just from M&M, talk about how he's extremely bullish in terms of the longer term prospects of the auto space. What's your sense? Would you be a buyer at current levels?
Yeah, I would be overweight, certainly auto, and we are also as a measure of disclosure. And in our analysis, I think Hero MotoCorp and Maruti, of course, instantly benefit because they are entry-level players, and price-sensitive sections will certainly look at their products. But longer term, I think M&M and Eicher Motor clearly remain our favorites, but definitely I think there's a good trading rally. By trading, I think 3 to 6 month type of an investment horizon if you have in Hero MotoCorp and Maruti, they may report good numbers. Not September, but definitely December quarter numbers which come in Jan may be quite impressive. And a lot of operating leverage will come into play. Material costs are generally stable. So I think that these two companies, good trading rallies next 3 to 4 months. But core holdings of ours, as a measure of disclosure, are in M&M and Eicher, which are on a fabulous run.
Absolutely. Just a quick, Dipan, stay on. I want to just play out this one soundbite, and I had the opportunity to interview the PFRD, that is the Pension Fund Regulatory Authority Chairman. And we, of course, spoke about a variety of things, but this is directly related to one name, which is MCX, and I wanted your thoughts there. So the PFRD chairman is essentially saying that pension funds have come to them, asking them whether the regulator is going to allow them to invest pension money into commodities. Well, they said, well, perhaps it is on the agenda, and it should move forward in the next 35 to 45 days. Gold and silver are two commodities that they're looking at first up. Listen in.
There is a demand for commodities, and that is really a demand for gold and silver. I think that's important because it's a very good diversification. So from, I would say, more of a safety point of view rather than a return point of view. We have a system of an investment guideline which goes through a committee, and that committee is working on it. We have the benefit of another committee which has looked into the pool corpus, and therefore we've got some excellent recommendations from there. So I think we're putting it together, and we will come out with a more enlarged list of instruments that can be invested into. The investment guidelines will probably happen, I would say 30 to 45 days, something like that, because it's a process, and then it goes to the board, and therefore it will take its... But the idea is to put it out quickly, because, we would like the pension funds to be able to design schemes in a better way.
With MCX, there's, of course, that proposal of FPIs, allowing FPIs. But this is, of course, pension local money, which doesn't need any other regulatory approval. It is up to the PFRDA, as you heard from the chairman there. Deepan, any thoughts? MCX?
Yeah, Prashant, first a disclosure. So we have invested in MCX for our clients in our PMS schemes as well. And certainly, I think it's the best exchange to be invested in at this point of time. And their journey on the option side has just about started, and that can certainly grow very well. A lot of options traders on BSE and NSE are now taking higher and higher positions on the MCX as well. And look, whenever your main products, the main counter, there's a bull market like we are seeing in gold, then the exchange certainly is going to benefit. We have seen that in BSE, NSE, so why not in MCX as well? And valuation still reasonable, around 66 times or so. So I would say that amongst all the kind of exchanges, this is one of the best to be invested in. But look, our views are biased because we have an investment position. But nonetheless, it's a great operating leverage play. And a lot of the problems, technology problems, platform problems, association with financial technology is all behind them. So I think prospects look good.
Okay, all right. Well, Deepan, we appreciate you joining in and giving us your view on a lot of those stocks. Have a good evening, and we'll chat up with you as the week progresses. By the way, before we slip into that break, take a look at the Nifty. The Nifty actually broke the 25,200 mark with ease. We moved lower, and the chart is telling you the picture. Reliance Industries is a stock that came in for profit taking. Another big name is Grasim. That as well has moved to the low point of the day. So let's get the intraday chart out there. pull up the metal index actually, because that's been doing very, very well. There appears someone is taking some good money off the table. The metal index as well, from being a relative outperformer, has now slipped. You have JSW Steel that's moved to the low point of the day. Tata Steel as well has slipped a little bit. So I think we should get both those two stocks up for you. And even the auto pack, whether you look
Okay, welcome back. Let's get you and put the spotlight on the top movers in the market right now. Market's made a move, right? But on the downside, that is. Although, that move is reversing a little bit, is it? Yes. I think it is, right? The low has been made at 25,150, and we've bounced about 40 points off that, 190 already. So this is, of course, a developing story with about 40 minutes to close. Hormuz is standing by with a spotlight on those movers. Hormuz, over to you.
Markets may have fallen to the lows of the day, but what has not fallen are a lot of these broader market names, and they're moving on extremely high volumes. Now take a look at John Cockerell India. This is nearing a 20% circuit in today's sessions, the fifth straight day of gains for this stock. And in the last 5 sessions, the stock has gone up 40% and trading at a 52-week high, maybe even a record high in today's session. And today's volumes on the stock are the highest going all the way back to October of 2007, and we have had almost well over 2 lakh shares that have traded in today's session. The 20-day average is only 7,500, and since the start of 2020 the stock has gone up almost 6x in value. So that's John Cockerell for you. Chemcon Specialty is the other one, is the biggest single day gain and the highest volumes that you've seen since August of 22. It snapped a 5-day losing streak today with this 13% advance. And today's session, we've seen well over 18.5 lakh shares being traded compared to the 20-day average of less than a lakh in today's trade. The stock has turned positive for 2025 but has a dubious distinction of never having delivered positive annual returns ever since it listed back in 2020. And even after this move, the stock remains well below its IPO price of 340. The other one on the list today is Tinna Rubber and Infra. The stock has seen its biggest single-day gain since Jan of 24. The volumes are the highest since Jan of 22. And today's session, we have had over 5 lakh shares being traded. And look at the 20-day average here. The 20-day average is only 15,000 shares. And the stock is down 30% so far this year. But take a look at the previous year returns. And starting 2020, it's been 4 years. In 2021, the stock was up over 5x. And in the rest of the remaining years, the stock has almost tripled every single year in value. And even in the funds bit, Bank of India small cap fund has close to 1.5% worth of stake in this company. And lastly, a PSU name on the list today, State Trading Corporation. We had the biggest single day gain and volume since July last year. We've had 25 lakh shares being traded today. The 20-day average is just 10,000 shares, and it's broken above all key moving averages. But mind you, very little float in the market because the government stake is at 90%. So a lot of these movers in the broader markets continuing to move on very, very strong volumes.
Well, interesting names as always. Tinna Rubber is 2021 was basically, the low was $15 and it closed at about 87, and so it's a 10-bagger in what, 3 years, 3.5 years. So that's and of course today is coming up with very, very large volumes, as Hormuz pointed out. So that's the overall kind of picture on a few of these very, very big moves. Amit Gupta is with us, Head of Equities, PMS, Motilal Oswal Private Wealth. Amit, good to have you here. Thank you very much for joining us. So direction from here, Amit, before we get into individual names, etc. You've had a nice move from 24,400 lows to about 25,400, giving back some now. What is your sense near term?
I think one parameter, if you look at, in the last 1 year, we have underperformed the emerging markets. So we have not gone anywhere. In fact, we were more consolidating, just flat to positive, and the emerging markets have given in excess of 20% of returns. In fact, in some cases, it is 40-45% returns also. So if you look at historically, whenever Nifty premium vis-a-vis MSCI emerging market premium comes down to close to 50%, it becomes a good buy. And so whenever it goes to 90% around, then it is definitely in excess. So the FIIs who are looking to putting money in emerging markets when the dollar is weak, then they find opportunities in other markets. But when it has come down to 50%, considering our inherent strength, I think it becomes a good market. So my sense is it may be consolidating, but you will see more ideas coming in. And why it is consolidating? Because the earnings growth somehow is not growing. I mean, you can expect banks to, not to have too much of profitability growth in financial year 26, because the NIMS compression actually is continuously there. This quarter also will be there. Last quarter may be relatively better, and then you will see some upside movement also coming up. So technology already under pressure. So for 50-55% market is actually deprived of some growth in earnings right now. So index may be consolidating, but opportunities are coming in stock specific. I think there we need to focus more.
Okay. Amit, hi, welcome to the show. Any specific sectors or stocks that you can talk about when you're talking about these opportunities?
See, right now I heard you were talking about MCX from the commodity space because gold has moved up and options volume is picking up. So that is, if you look at in the commodity space only, because dollar has come down, right? So there has been an interest rate cut situation coming up in US, maybe 3 rate cuts, one already there and then coming 2 more maybe there. So in that case, I think commodities to some extent can start seeing a surge. But one of those commodities which I think maybe a next good investment is copper. Because if you see it is in definitely a high deficit in copper, which is going to be there going forward. In fact, there is a United Nations Trade Union, estimate that in coming decade, more than 80 copper mines are required, and it takes 15 to 25 years for these mines to get operational. So you can expect that some more severe deficit may be there, prices can remain firm, and it is needed everywhere. I mean, you look at from power transmission to electric vehicles, to defense, to electronics, renewables, you need it everywhere. India is doing reforms in all these places. So that's why India, I think, will start looking at more mining in this space. Obviously, critical minerals is already there on the radar of the government. So some companies like Hindustan Copper and all, which have already declared triple capex actually here, with the surge in copper, obviously the benefit will come there. If you look at electric vehicles and compare with the traditional vehicles, almost 4 times extra copper requirement is there in those vehicles. So I think a good trend building up in that space. And despite this volatility, because they don't have any major weight in the index, they are not part of index, I think they can be good movers.
Hindustan Copper, Amit, it's a double-edged sword at times, right? Because all these fundamentals that you stated, the people are talking about it as well. The stock, though, suddenly whipsawed investors. 350 rupees became 250 rupees. And then, in fact, now it's pulling back a little bit. So you think it's good even after the recent run? I think it's ballpark close to 300 rupees on Hindustan Copper.
So I think you need to look at those segments which have remained underperformer for quite some time now. Valuations have become better, and they are looking for some triggers. And I think this is where these triggers are coming in. So my sense is dollar depreciating, definitely it will bring some triggers to the commodity space. And if you look at from the China perspective also, so they have already seen excessive production in metals and chemicals before, but now we have seen some sign of production cuts because there is the demand, the domestic demand is not growing so high. So in that case, some reversals actually definitely are going to come. And I think copper is coming out as a structural story going forward. So this is where I think government, which is pushed towards the wall right now for doing reforms, this is one of the reform that they are definitely looking at, to look at more critical minerals mining now.
Got your view on that, Amit. Let's talk about the star of the last week, Urban Company. You use it, probably you do. I as well do use it. So the use case scenario is very, very good. But now shareholders as well are impressed. The way the stock, it's given a big, big return. But at times we see that when the float is limited, there is a lock-in as well that's taking place. And though the runway is good, sometimes investors, they tend to get into this IPO euphoria and they get stuck at times. So do you think bulk of the good news is already in the price just for the time being? The stock today itself, I think it's down closer to around 5 to 6% from the top.
So I think when you look at the tech platforms, it is getting very difficult to gauge the valuations because the kind of scale up they are doing now. You look at across the industries. I mean, even if you look at Paytm, if you look at even PV FinTech or the Eternals of the world, we are seeing actually that they are continuously gaining strength to strength. And my sense is profitability is going to be better going forward. So in this particular company, if you see maybe some consolidation, possible. But if you look at the peers in the same domain, how many peers you can count actually here? So which is moving into the homes and doing all this kind of work. So I think it's a good business. One of the first mover advantage they have in this segment, and that's why that particular scenario is building up. But yes, I think we are not focused on this company right now. From the immediate perspective, we are focused more on the Eternals of the world, where we feel that the 90-80% of PAT compounding is going to happen, because whatever capex they have to do, they have already done it recently. From 1,300 dark stores, they have already moved to 2,000. They are moving to 2,000 dark stores by December 2025. And then the profit margin of 2.5%. We feel that going forward, it may be 4 to 5% range. So the current profitability of around 500, 600 crores, it can move to 2,500 crores plus. And I think this is where, that is where we are focusing more, where the visibility is higher.
All right, Amit, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Let's now cut across to Shireen, who is with the Chief Economic Advisor. Let's cut across.
Given my cautious nature, I will simply say that I am more comfortable now that the final number, which we have given a range, 6.3 to 6.8% in real terms, I'm more comfortable now in saying that we will be tending towards the upper end of this range rather than the lower end of this range, considering what's happening on the external front. So that is the extent to which I am prepared to sound more relaxed and confident at this point. But once second quarter number comes, then we will revisit the estimates.
No, we'll take that, the higher end of that band that you had laid out in the economic survey. But if we could just understand the stimulus provided by both the income tax cuts as well as the GST benefits. The Prime Minister gave a number of 2.5 lakh crore rupees when he addressed the nation yesterday. What's the estimate that you're working with? Because I'm sure that will go into the budget math as well.
No, I think his numbers are quite appropriate, taking into account both the direct and the indirect taxes, because especially focusing on the indirect tax cut, GST 2.0, it's a combination of three components. One is the reductions in rates from, many categories going from 18 to 5 and the 12 becoming 5, etc. That is one major chunk. The second chunk is the withdrawal of the compensation cess. These two are very positive to the households. The small minus is the one where few categories where the rate goes from 28 to 40. So the final tax savings is the first two components minus the third component, and that number will be upwards of 1 lakh crore. And then if you really assume a marginal propensity to consume, as they call it, MPC in the economist jargon, which basically means depending on how much households consume, then it leads to further income growth, and so 2-3 rounds of multiplier effect, then the total impact on the economy will be even more than 2.5 lakh crores. So I think what the Honorable Prime Minister said was purely the static estimate of the tax saved for the households. But the impact on the economy can be bigger. But of course, we know that there are other uncertainties and other factors which may dilute some of this translation of the savings into aggregate demand or GDP growth, as we call it. But the total impact is of this order of magnitude between the direct tax relief and the indirect tax relief put together.
I'll come to the uncertainties that you alluded to in just a second, but I just want to continue with the GST conversation and talk about the impact on states and state finances, because many states came out and said that they were concerned about the revenue impact that they would have to face. As you look at how things are panning out, and we've just seen the CAG numbers also come in as far as state revenues are concerned, what's your own indication, considering the fact that there is no longer any compensation cess?
So, look, I mean, in fact, former RBI Governor C. Rangarajan and Mr. Shanmugam, former Finance Secretary of Tamil Nadu government, wrote an article before the GST Council met about 3 weeks ago as to how well states have done with GST. And they particularly pointed out that the producing states, which were concerned about GST impacting them adversely, actually have ended up doing much better. So that's one. The second point I would like to make is GST rate, the revenue neutral rate, which was around 15% when GST came into being, actually has been coming down even before this happened. So by last year, it was down to 11% something.
Yes.
So there's a 4%. Every time the revenue neutral rate or the effective GST rate came down, but the annual average collection actually kept going higher
up
and higher. So you already have a track record where the reduction in the GST rate, effective GST rate, did not result in decline in GST revenues. But revenues were having a step-up function every year. And this happened even in 2019 before the election, sometime in February, March or April, I don't remember the exact month, when the GST significant reliefs were announced. There was a concern that it would lead to a decline in revenue. But immediately after the elections, the monthly numbers picked up within no time. So these two examples, I think, give us encouragement that the volume growth will make up for the static calculation that, as the rate drops, the revenue collections will drop because the volumes will go up. And the last point I want to make is, last year I wrote a paper co-authored with the Joint Secretary in the GST Council. We both wrote saying that whenever UPI transactions they pick up, they have a very high correlation with GST revenues. And UPI transactions are growing,
record highs.
Growing at 20 to 30% per annum year on year every month. So the rise in UPI transaction is actually a very good harbinger of GST revenues continuing to rise, and with the rate cut, the volume effect will dominate. So we shouldn't be overly concerned because the track record is there. Rate reductions have led to more formalization rather than less formalization, and that means more revenues.
That means more revenues,
more
and
transactions,
hence, more transactions, and hence you believe states have little reason to be concerned at this point in time. Which brings me to the question about the government's own fiscal math. We are, of course, getting into the budget-making exercise. Do you believe that this will have any impact as far as the government's own fiscal math is concerned?
I think we are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
Okay, confident that the fiscal math is going to hold up. That's the chief economic advisor in conversation with Shireen, and we'll keep getting you excerpts of that particular conversation. Well, just a quick word on the markets. It's been a little topsy-turvy. There's been a little bit of a recovery from the day's low as well. So 25,198 or 200 odd levels is where we're at. So we bounced back around 50 points from the day's low. But nonetheless, time now to go across to Nimesh. He's here with us to tell us about his usual D-Street chatter and what he's picking up today. Nimesh.
Hi, Ekta. So now a down day, so to speak, but I would say it's more of a day for consolidation because the large part of the drag has come from the IT names. Despite a lot of companies saying that there is not much impact, the IT index is down 3%, individual stocks are down 3 to 5%. So there is clearly a bit of impact on the IT stocks today. Overall, from a flow perspective, again, it's a mixed day of trade, but I understand there is a bit of buying interest in select large cap names and the PSU names as well. For PSUs in particular, I've been saying for a while now that you are going to see a bit of short covering rally in many of those PSU names. That's standing out in some of the names today. So PSU is a combination of buying as well as short covering, but broadly from an FI perspective, it's a pretty much mixed day of trade. Insurance, I would like to mention that's one space where there's a bit of genuine buying from larger institutions today, though. That apart, I guess a day of consolidation with a bit of negative bias, largely dragged by IT.
Okay, Nimesh, what about specific stocks?
So the first stock on the list is MK Global. That stock is locked at 20% upper circuit. There is a board meeting scheduled for fundraising today. Lots of speculation doing around. So need to see what finally comes up, whether it's an individual investor or a foreign bank or a strategic investor coming in. But there is a board meeting for fundraising today. So that's the first stock. The second stock is Borosil's Renewable. Even that is buzzing in trade on very large volumes, up 10% last when I checked. Again, the city is anticipating some corporate development with regards to their foreign subsidiary very soon. So that's a buzz as far as Borosil is concerned. The third name is Hindustan Copper. Again, big volumes, and I understand some very strong buying from larger HNIs in Hindustan Copper, and hence the reason why that's buzzing in trade as well. And the last is K Fintech. It's part of my chatter as well, and there is a flash that I can see that there could be a large block. So that's something which the city is anticipating. A large block deal is likely in KFin, and that's the reason why the stock is under pressure. Remember, only in May this year, General Atlantic sold 10% stake in KFin. So they own 21% now, and that's classified as promoter holding. So if they are looking to sell out, then maybe the institutional holding will be a majority in KFin going forward.
A very interesting list as always, Nimesh. Thank you very much for that. Let's actually take that and build on that last name that Nimesh mentioned, which is K Fintech. Yash is joining us with what he's picking up in terms of specifics of a block which may be about to happen. Yash, take it away.
Well, exactly what Nimesh mentioned, we'll pick it up from there. What we've been given to understand from our sources is that General Atlantic, which is of course a promoter shareholder, is looking to partly sell its stake as far as K Fintech is concerned. As far as quantum is concerned, what we've been given to understand from our sources in the investment banking industry is that General Atlantic may look to sell anywhere between 10 to 15% of its stake, of its total about 23% holding in the company. scrutiny as far as this block deal is concerned. Mutual funds, insurance companies have been approached by the bankers as far as this block and the book building process there is concerned. According to our sources, this particular deal can happen at a discount of anywhere between about 5 to 8% to the current market price. What we've been given to understand is that IIFL as well as ICICI Securities are broker to the K-Fintech block deal. We've reached out to both General Atlantic as well as K-Fintech. General Atlantic has replied that they do not wish to comment as far as the story is concerned, and as a firm, they do not comment on market speculation. We are still awaiting a reply from K-Fintech.
Okay, all right. Yash, thank you very much for that. That's K-Fintech in focus. Let's take a quick commercial break here. We're going to come back with some near-term trading ideas, the F&O setup as well from the F&O desk. Coming up. Okay, well, welcome back. There's, 13 minutes to go for close. Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Prashant, I would suggest BTST on one of the Adani names, Ambuja. I think the entire pack is doing very well. I mean, Ambuja has slightly come off the day's high, but chart pattern or the setup remains on the positive side. So BTST with a stop at about 585. Good for target of 597 thereabouts. And one, a negative call, which is on AU Bank and Finance. Take a STVT of a stop at about 712 and a target around 695.
Okay, all right. We now have Sudeep Bandyopadhyay joining in to discuss a couple of fundamentals of the market. Sudeep, hi, welcome to the show. Well, you know, the big topic obviously today has been what's taking place with the IT stocks. Just wanted your view. Would you probably venture out and buy a Tech M, TCS, Infosys at these levels, all of them down anywhere between 2.5% to 3% odd?
Well, not really. In fact, we have been a little negative and kind of conservative on the IT pack of quite some time. And we strongly believe that there are a lot of headwinds which haven't still disappeared as far as Indian IT companies are concerned. And I'm not talking about this H-1B issue at all. Look, AI is becoming big globally, and there will be pressure on revenue as far as domestic Indian companies are concerned, because the use of AI will enable a reduction of cost for corporates, and they will like that to be passed on through their service providers, which is Indian IT companies. They don't have their own product to command a better pricing. So under the circumstances, I think Indian IT companies, particularly the large ones, they will be at a disadvantage in terms of margins going forward for a considerable period of time. Now, if somebody has to look at IT, it is better to look at mid-cap and small-cap IT companies, which are servicing niche areas. So, I've been talking about this travel and tourism segment, which is booming globally. And some of the IT companies which are catering to their needs, yes, those can be looked at. Similarly, there's a transition happening in automobile sector from ICE to EV. And that transition requires a lot of technology support, and companies which are working in that space needs to be looked at. So, we have to focus on these kind of niche IT companies catering to segments which are doing well, rather than go for the large cap, general service providing IT companies.
Okay, well, definitely a bit of pressure, which is now seeping in for the mid-caps, down around 0.6%. The advanced decline ratio also nothing great today. So 1,000 stocks advancing to around 1,800 to 1,900 stocks declining. So it's worsened as the day has progressed. And as you can see, the gap is only widened as the day has gone on. But good time then to bring Nigel in. He's going to tell us what the latest is from the F&O desk. Nigel, over to you.
Well, the Nifty clearly lost its way in the last 60 minutes or so. But at least the good news is on a closing basis, we probably will conquer the 25,200 odd mark. The problem in the last 60 minutes was the Nifty Bank. That was in good form. That was holding one end up. That seems to have lost its form a little bit. But I don't think there are any big shots in the system on the Nifty Bank. In fact, as that plate is telling you, the Nifty Bank is down 150 points, and there is some unwinding of long positions out there. So no fresh shots on the Nifty Bank. Moving to the options data, the 25,250 call. The premium has corrected from around 140, 150 rupees odd. It's come down to around 45 rupees. Aggressive writing is what we're seeing out there. So in the near term, 25,400 will be the crucial resistance mark. On the downside, though, the 25,200 put, that as well as seeing closer on 70 lakh shares getting added out there. Premiums holding in that vicinity of around 35 rupees, but there is some put buying that we're witnessing out there. And that's why the premium has moved from around 20 rupees to around 35 rupees. You got the direction right. And in fact, you're making money if you bought that particular put. Moving to stocks in focus, well, you have some fresh shorts that are created in a couple of pharma as well as on IT stocks. So Tech Mahindra, big open interest build up out there. The stock is down, shots being seen on that one. Glenmark, I recall they announced that big deal. The stock went dancing away to 2,200 rupees plus. From there, the stock has seen some correction, and now it's struggling to get past the previous high. There are fresh shorts getting added into the system on this one as well. And a surprise stock that's come in for short covering is LIC. Big short covering bounce is what we're seeing out here. After a while, the stock has moved up, and the open interest is lower on that particular one. And finally, two stocks that we're looking at, very, very important. One is RBL Bank. In all probability, the last time I checked, that's almost a surety that by the end of today, when the file comes out, that's going to be in the F&O ban. So we'll keep an eye out on that one. And the one that's likely to come out of the F&O ban is Angel One. It's spent the last few trading sessions in the F&O ban. But I was looking at the unwinding that we're seeing out there, and that should probably be out. Back to you.
All right, thank you very much for that. Keep an eye out on those two names, and of course, very helpful overall setup as far as F&O data goes. We'll take a break. We're back on the other side. Last, 8 minutes of markets coming up before we end today's session.
Welcome back. Well, just about 3.5 minutes to go till we close Monday's trading session. Sudeep, wanted your thoughts. The Adani Group stocks are showing a lot of momentum. Would you be a buyer?
Well, some of the stocks are definitely worth buying. I mean, I won't buy for short term, but let's say Adani Ports. I have been positive on this stock for quite some time, and I still maintain that it's definitely worth buying from a long-term point of view, and investors should have Adani Port in their portfolio. The other stock which I do like and I have started liking in spite of the valuation is Adani Power. I think, overall power sector, we have been positive for quite some time, and we believe there is a structural positive, as far as Indian power segment is concerned, and pretty much all the participants in the power space will benefit of this upswing. Adani Power definitely is very well positioned. Their combination of traditional energy as well as green energy is probably a step in the right direction. Yes, valuations are not cheap, but from a long-term perspective, both these stocks can be looked at. Of course, people do make a lot of money trading in Adani Group stocks because they have that inherent volatility, and people can use the trading opportunities there. But I'm talking pure long-term, Adani Power and Adani Port.
Okay, all right. So that's on the Adani stocks. Have you managed to look at Garden Reach? It's been in focus because of a contract which they've won from a German company.
I did. In fact, overall, we do like the shipbuilding companies. I think whether it's a Mazagaon, whether it's Cochin Shipyard, whether it's Garden Reach, all of them have great potential. See, except the issue is the valuation isn't cheap. And the market, gets excited whenever they receive fresh orders. We have to remember that between the receiving an order and executing it, there is a significant time lag for a shipyard. And, there may be disappointment when the earnings come out, unless we are a little cautious here. But from a long-term perspective, all the three shipyards are definitely worth buying. If I have to pick one, I'll still pick Mazagaon.
Yeah, Mazagaon, out of everything which is what's happening. By the way, this one name keeps, just because it's doing so well, NetWeb, right? Supercomputers and whatnot. I just looked at what they would do. There's a IIFL. IIFL upgraded this stock at the beginning of September. And based on their 27 earnings, net earnings, it's trading at about 50 times now. Trailing, of course, is triple digits and more. Have you looked at, I think we've discussed this before, Sudeep. Any thoughts?
Well, I do like the stock. Somehow the market probably missed the excitement when the prices, should have gone up. The reports and people started noticing much later. I think they are absolutely rightly positioned. And I remember in multiple, interviews, you've been asking which company one should look at if they have to focus on AI and related activities. I think this is one company which is positioned rightly to benefit from this entire AI wave. Definitely worth looking even at current level from a long-term perspective.
Wave to ho gaya Sudeep isme, and big wave, right? Tsunami.
Absolutely. But that's what I'm saying, Prashant, that you have to look long-term now. You can't buy NetWeb for a quick gain now anymore.
Yeah, no, it's done very, very well.